Renovation loans are a great loan for anybody either looking to buy or refinance a property that needs some work. This can be your way to buy a fixer-upper or perhaps buy a property through a foreclosure where the bank or the seller doesn't want to make any repairs to the property. Or maybe, the property is just outdated. They need an addition that's going to be able to allow you to buy that home and be what you're looking for. So your typical loan wants to make sure that a property is safe, sound, and secure. There's no safety hazards. So a renovation loan can bring a property up to those codes. So in this video, I'm going to go over the basic process of taking on a renovation loan so you can decide if it's right for you. So just like any other loan, the process starts with an initial loan application. And you might not know if you're ultimately going to do a renovation loan or not. That's okay. There isn't a separate loan application for a renovation loan versus a non-renovation loan. With any loan application, I can show you all products, and that includes a renovation loan. So renovation loan allows you to follow the same process as any other loan. Again, we start with that initial application. We gather documents, things like pay stubs, bank statements, W-2s, and anything else that we might need from you. And once you're qualified, you can start to look at homes. So most of the main financing programs, like conventional FHA and VA, will have a renovation loan component. So there are some small variations between these, but I'm going to describe the process that's going to cover all of these. The first is that you're going to identify a property once you are qualified that you'd like to renovate. So I will describe this in terms of a purchase, but if you already own the home, the process is the same, except that there's no seller to negotiate. You're going to do a refinance. If you're looking for down payment assistance programs, just as a side note, renovation loans are typically not a good fit. So typically a down payment assistance program wants that property to be move-in ready, and they will not work with a renovation loan unless that down payment assistance program specifically has a product that is designed to renovate loans. Those are fairly rare, not impossible to find, but it is fairly rare. Renovation loan is appropriate for not a full teardown of a property. A full teardown of a property is going to be a construction loan. But a renovation is used for smaller repairs. It could be as minor as putting in flooring, replacing appliances, or it could be taking a home all the way down to the studs and putting on an addition, as long as it is not a full teardown. There are a lot of unknowns with a renovation loan. There are upfront costs involved. Renovation loans always have, or I shouldn't say always, but they tend to have surprises, we'll say. And sometimes you can get down the road with a renovation loan only to discover that the numbers just don't work, or that you can't come to an agreement that works between you and the seller. And there's really, truly no way to know whether a renovation loan is going to look, what it's going to look like until you have people starting to dig into that project. So I tell people right up front, if you're thinking about doing a renovation loan, you need to get comfortable with the uncomfortable and the unknown, and at least be prepared for the possibility that we might have to abandon the project and move on to something else that will work. So the first thing I would do if you are looking to do a renovation loan is to walk the property, either with a licensed contractor, or even better, there's someone called a HUD consultant, and I'll get more into them later, who's going to be very important during this whole process. So a HUD consultant, they're going to be the quarterback of this whole transaction. Their job is to outline the scope of work that needs to be completed along with any of your wants and needs. So in a lot of cases, HUD consultants are also contractors or home inspectors, or they have experience in those areas. So they can walk the property with you, and they'll have a fairly good idea of what needs to be done for the loan. And they can also give you an idea of what it's going to cost in order to do what you were looking to do. A HUD consultant is going to be the liaison between you, the buyer, the lender, me, and the contractor to make sure that we can come up with a detailed plan for that renovation that's going to outline all of the costs, all of the materials, the labor that's going to be done, and it has to be done by a licensed contractor. You will not be completing any of the repairs on your own. All of the work being done has to be done by an independent licensed contractor who will have to submit a detailed bid on exactly what they're doing, and what those materials and labor are all going to look like. There is a list online. There's a website that you can look up in your area, a list online of HUD consultants that is on the HUD website. I think it's a good idea to at least talk with a HUD consultant beforehand, get their recommendations on local contractors who do good work, and it'll help you understand the renovation loan process. Not every contractor understands renovation loans. So sometimes you might know somebody, but they're not really equipped to deal with the renovation loan process. They're not equipped or really understand the paperwork that's going to be involved in order to make this successful. So once you have your list of contractors or a contractor, I would interview them, let them know you're looking to do a renovation loan, see which ones you like, the ones that understand your vision. The thing that's important for contractors that you need to understand is that they're going to have to submit a lot of documents to us. They're going to give us their bank statements, professional references, a resume, licenses, insurance, a detailed bid. All of this is done to make sure that the contractor that we are going to be partnering up with is in good financial standing. Before you make an offer, I think it's, again, a good idea to walk the property with the HUD consultant to see what you're getting into. They will typically charge a fee. That might be a couple $100s to do this. And you can let them know kind of roughly what you're thinking that you want to do with the property, and they will be able to give you a rough estimate of what it's going to cost. They're going to make a list of things that they know based upon a visual inspection what has to be done to make the property safe and up to code, and then they're going to combine that with a list of anything additional that maybe that you would like to do. That's maybe not necessarily required, but it is something that you would like to do. So an example of this would be freshening up a bathroom that is completely functional, but maybe it's out of date. So while this isn't an official contractor's bid, it at least informs you when it comes to making an offer on the property and making sure that you're not underestimating from the get-go how much that renovation is going to cost. So let's use an example. Let's say that you identify a property that's listed for $300,000. Once it's fixed up, we think that's going to be worth about $400,000. But during your initial walkthrough, you talk with your contractor or the HUD consultant, and you discover that realistically it's probably going to cost about $150,000 to bring the property up to code and to be what you want it to be. So in that scenario, you can't offer $300,000, or at least you wouldn't want to, because it's going to cost $450,000 to buy and renovate the property, but it's only going to be worth $400,000. So knowing what that number is gives you a solid number, at least as a starting point, where you know that you won't want to offer anything more than $250,000, or else the numbers just aren't going to make sense. So once the realtor makes your offer and the contract is ratified or accepted, that's when the work really begins. The HUD consultant is going to go back out to the property. They will work with you to come up with a scope of work that the contractor is going to need to come up with a detailed bid that covers everything that's listed. So you're going to say, I want X, Y, and Z taken care of by a contractor. So in many cases, the HUD consultant is also a home inspector, so they can do a home inspection report at the same time to make sure that everything that needs to be addressed is done and taken care of through the renovations. The contractor is then going to take that list, and they're going to make sure they're going to bid on everything that's on that list. It needs to be very detailed. Again, it should show the specific materials that are being used. It's going to outline labor costs, and then that HUD consultant is going to review that bid to make sure that everything is addressed, including the cost of permits. They want to make sure that it is absolutely detailed enough and realistic, and it's going to cover everything that is going to be required in order to do that renovation. And if they agree that it is realistic enough, they're going to type it up into an approved renovation plan, and they're going to send it to us, the mortgage lender. So until we have that renovation plan, the loan is kind of at a standstill because everything hinges upon understanding what is going to be done to that property and the costs that are associated with it. As the HUD consultant and contractor are going after the property, the important thing to understand here is that there are upfront costs. So this goes back to that kind of unknown and making sure that you are comfortable with that unknown. So it costs money to hire a contractor to do those bids, for a HUD consultant to be working. So they need to be paid regardless of whether you ultimately decide to go through with that property or not. So you need to be prepared to that you might be fronting anywhere from, say, $1,000 to $2,000 for inspections, for a HUD consultant to do their work, and ultimately figure out exactly how much this renovation is going to cost. All right, so back to the loan process. We've got the renovation plan in place. The loan process at this point can really start to move along because we know how much those renovations are going to cost. We'll package up all of your documents that you sent to us and make sure that you're qualified, and we're going to order an appraisal of the property. So the big twist in this is that the appraisal is going to be sent a copy of that renovation plan. So when they look at that property, they're not just going to look at it in terms of what it is worth as is, but they're going to give us a value of what it's going to be worth after those renovations are complete. So the important figure that we need to determine is that the home needs to be worth what you're purchasing it for plus the cost of renovations. So this is an important milestone because up until this point, we've just had contractors viewing the project, but we need really written documentation to make sure that the home is worth the purchase price plus the cost of those renovations. And sometimes those costs just aren't reflected in the value. And if the value isn't there, then it's back to the drawing board between you and the seller to negotiate a price where it works. And at this point, sometimes deals can fall through. And again, there are costs associated with the cost of an appraisal. So you need to make sure that you're prepared. If we order that appraisal, it usually costs about $500 or $600. If the numbers just don't work, the appraiser still does need to be paid for the work that they've done. So assuming everything looks good on the appraisal, everything else at that point follows essentially the same loan process as any other loan. We approve the loan, we review the contractor's financials and licenses, and then we are moving towards settlement. So what we haven't covered is how the loan is structured, and this is going to be different from loan to loan. So as I mentioned, you can, or actually no, I'm not sure if I have mentioned. So an important point here to be prepared for is that renovation loan rates are going to be a little bit higher. Typically 0.5% to 1% higher than if it was a non-renovation loan. And that's because there is a lot of moving parts that need to be managed by a lender, not just during the loan process, but after, as we're going to see. The loan's down payment is going to be based upon the sales price plus the cost of renovation of renovating the property. So let's use an example that I used before. If you're buying a home for $250,000 and it's going to cost you $150,000 to renovate it, that means that you have really in our eyes a total purchase price or acquisition cost of $400,000. $250,000 to buy the home, $150,000 to renovate it. Your down payment is going to be based upon that total figure. So For VA, there is no down payment, and one of the twists with VA is that they're generally going to be limited to really non-structural minor repairs. They do not require the use of a HUD consultant. So if you just want to pick a contractor and move on, you can do it. We still have to do our due diligence to make sure they're in good financial standing, but you do not need a HUD consultant. FHA's renovation loan is called a 203K, and it's probably one of the most popular of the renovation loans. It requires a 3.5% down payment. FHA 203K loans have two types. They have a limited or streamlined 203K for minor non-structural repairs. For those, we might not require a HUD consultant because, it might just be flooring, replacing appliances. They also have another loan product called a standard, or you might hear it referenced as a full 203K, which is designed for bigger projects where a HUD consultant will always be required. Because FHA and VA are government loans, they need to be brought up to those financing program standards. So there might be a few more repairs that are required for them that might not be required for a conventional loan. A conventional renovation loan is called a HomeStyle loan. It requires 5% down. They can handle minor or major renovations, and they're going to have the use of a HUD consultant. So once your loan is clear to close, the seller transfers ownership to you. So the question is, well, what happens at that point? Do we just hand a bunch of money to you and your contractor and say, well, good luck? The answer to that is no. Everything with a renovation loan is designed to protect you, the home buyer, and us as the mortgage lender. At settlement, we're going to issue a small draw to the contractor so they can start the work. The HUD consultant is going to break down what phases need to be met during that construction loan project. So there might be 3 to 6 phases. The contractor doesn't get paid until they meet that phase. So at each point, the property will be re-inspected. They will verify that they've completed the work. The contractor gets paid, and then they can move on to the next phase of the project. We also build in a contingency reserve, typically about 10%, but it can be as high as 15 or 20, depending upon the scope of the project. It's going to cover legitimate, unforeseen expenses. So you don't have to fork out money. So if they break down a wall and they see that they have to do something that wasn't outlined in the original plan, that contingency reserve helps cover those costs. This is also the reason why we insist that the contractor's bid is extremely detailed. To do a renovation loan, they sign a contract with us that says that they're going to complete the work in a timely, workmanlike manner and to a professional standard. So if your contractor goes missing, or they can't complete the work, or otherwise they violate the contract, we can kick them off the job and get another contractor who will be able to complete that work. It's important to realize that we are just as invested as making sure that the renovations are done on budget and on time. So the worst case scenario for anyone is to have a home that is half completed. And that's why there's so much scrutiny done up front. And that's why we have these guardrails in place to protect both you and us. It also explains why interest rates are a little bit higher on renovation loans, is that there's a certain amount of risk. There's a lot of moving pieces here that need to be managed. So that's always going to be reflected with a little bit of a higher interest rate. That higher interest rate makes sense because you're able to build that property to your specific standards. That's it. That's all I have for you here. Again, this doesn't cover everything that could be covered in a renovation loan, but this should give you a good idea of generally how a renovation loan works, the pros and cons of it. I hope it was informative for you. And if you do have any more questions, reach out anytime.